Yo, what's going on, guys? Back at it again, like a crack addict. But here we're gonna go again and do a short little trade breakdown and recap pretty much of what happened today and what entries we could have taken and how to avoid some losses throughout this morning. But today was pretty much one of those type of trades that I needed to go back onto the drawing board and teach myself a lesson and not to always stab an entry whenever my entry model forms. Take it with more, you know, I guess you could say more sensible knowledge around the market, the terms of draws and liquidity or imbalances that need to be reached. So, with that being said, I'm going to go ahead and tell you where I could have avoided my mistake and at the same time had a good A plus trade within this day. So, starting off for today, always going to grab an OTE pool from the swing high to swing low on the very, very recent leg. So, here before pre market, and obviously during market open, we were having this leg down. Obviously, you started from London, and from London carried over to pre-market, and pre-market was still following down. But we ended up doing a pullback, and that's what I really wanted to see us do this morning, was a pullback into the OTE range and tap into these levels that we have here. But that what I see here from this chart and where my imbalances are sitting from here, I have a fair value gap right here. So with that being said, we have a high time frame PD rate within the OTE levels. And if you watched my video yesterday that I uploaded on leaking my model, this is exactly what I look for every single morning and every single day. So here we had this same play that popped up again. So going on to the 5 minute to get more of a precise little imbalance if you need it or something that it's more of your favorable. Here I have engineer liquidity sitting above that fair value gap that we do have in the 15 minute. Same thing with the 30 minute and other time frames as well. So the 30 minute has that right there. We do wick into the 786 area for a top tick there. Could have traded that as well, but I like to trade them with confirmation, obviously with CISDs and IFGs. So my first mistake was shorting off rip because here on market open it was barely 929. We ended up rejecting the 705 level, especially with that 15 and 30 minute gap, and I really wanted to see us to bleed down. But I didn't want to enter a trigger or an execution within my entry model here because we do have a 2 candle CISD and just overall just a CISD in general. So here would have been my initial entry within the first minute of market open. But if we do a first, entry within the first few minutes of market open, we could probably get wicked out on the opposite area. So I didn't want to, gamble market open today. But this did form the model and entry model that I needed to enter in for these shorts. So for myself, I was looking for a continuation to go down to tag the rest of the drawn liquidity. And so this is where my play happens. So here, whenever I did enter within this CISD, I'm going to explain why I did. So here, we did a small pullback going back to the under equilibrium, right? And so what I wanted to see was some sort of rejection off of imbalance. And here on the 3 minute, I was able to receive this imbalance here, and we did reject it. And so what I wanted to look for was a 1 minute entry, and that 1 minute entry did give me my CISD that I needed, and I did enter right here off the displacement of this candle. So my original idea was to end up shorting here, tagging out the rest of the Asia low. But that was my mistake and not reading the right price action because we failed to sweep this low. So I know we wanted to go into this low, right? But since I saw a reversal, and yes, I did break one of my rules today, I did get pretty heated that we did lose right off the rip. After I entered, the next candle just got taken out. So my stop loss was right here, got taken out here with this candle. But then I was like, this play looks too good. And also, if you watch many creators in the space, and if you know who trading with Lewis is, he likes to have this last fair value gap set up right here. And so that setup just played beautifully and phenomenally. And I just remember, being a student, one of his, and using that last fair value gap of the series is whenever we ended up rejecting this imbalance here. And then we had a IFAG CISD, so that's where you see this execution here. And from there, I just ended up taking out my full position right here at these highs. And from here, I think I lost about like 250 bucks, but then I just remade it again within this uptrend up there. But my mistake was just not reading price action. It was just being really heated, and since I lost earlier, but then regaining everything back, I was fine. I was just gonna say 2 trades is already breaking my rules. I only take 1 trade a day, but I just needed a revenge trade to get that money back because I knew where the market was gonna go and where the market needed to go. So here, I should have just patiently waited until this pullback came up because we did get a sweep of liquidity and a secondary rejection within the same PD array. And from there, my model formed again. So IFEG, CISD, or this entry down here, it still would have taken out the Asia lows. So with that being said, that would have been my initial entry, and that entry was probably the best entry you could have gotten. So after this inversion of the fair value gap and the displacement, could have entered there, and then from that just ended up targeting the rest of John liquidity, which is at Asia low that we needed to fail, or that we failed to sweep earlier. But at the same time, we failed to sweep this liquidity zone here too, so it's only right for us to seek that there. And again, same thing, going back again, we had a triple, pretty much like a triple relative equal highs here. Not really, but here we just respecting the same imbalance again. You could just go and over, still within the same OTE drawing that we did. Same thing with the 15 and 30-minute gap that we picked from before within these levels. So after that, we have a solid rejection again. You could have entered on this IFEG, or you could have entered on this one CISD. But I don't like to use one candle CISDs, so I'll go ahead and use whatever the trend gives me that sweep the recent liquidity. So from there, that would be my CISD. And I would just label that there. That would be my initial entry from this displacement candle, and I would go ahead and just target the rest of the drawn liquidity, which wouldn't be that Asia low. It would just mainly be whatever we input as a new swing low from that drawn liquidity that we did hit earlier. So that would have been my TP point there. And so after that, stop loss at the protected high, obviously. And then if you look closely, we do tap into the CISD again, just perfectly for a top tick entry as well. And if you weren't comfortable re-entering that, you could also pull out your fib tool again, and I'm pretty sure it was still under equilibrium. So right there, if it tells you if we're under equilibrium, we could go ahead and see that rejection that we need to go ahead and sell and not buy. So obviously what ICT says and mentions, if you're below equilibrium, you need to, and you're in discount price, you need to sell. But if you're above in premium, there's no reason why for you to sell, because you're going to just bounce back and hit a pretty much equilibrium or one of the OTE levels, and from there we're going to see a reversal depending on if there is any PD rays sticking out or within those levels. But obviously, today was really one of those days that you could have just taken it patiently, mainly because this FOMC, it's always going to be choppy. You're always going to have that price action that this is not like move anywhere besides just sideways or in the same ranges, and that's what we got today. So there was pretty much accumulated after the AM session, and from there we just accumulated until obviously 2 o'clock, wherever FOMC does hit. So after that, that's what we ended up getting, and yeah, wasn't really too big of a move. I didn't really care for my trade right after, mainly because it was just already broke my rules already. I was already heated, so I just didn't need to execute anymore. I just needed to log off the chart just to, you know, not blow funded accounts or even just, take away my buffer sizing and all these accounts. So yeah, other than that, I mean, it was a pretty easy day, not too hard. I mean, if you see the video yesterday, we could have banked easily if you waited and be patient, but that was pretty much my lesson learned today. You just got to be more patient. Just go ahead and not, revenge trade as well, because that's what I did. And I ended up bringing break even, but if I lost, then I would have just had lost double and I would have been more heated. So, I gotta take it with a grain of salt next time. But either way, I hope you guys learned something. And at the same time, if you have any questions, you go ahead and join my Discord. I'll be answering there, or just leave a comment on the YouTube video and I'll answer your questions there. But other than that, that's how you could have banked today, how I banked today, and how I realized my errors. And hopefully, you're able to catch those errors in real time for yourself and not be like me. But yeah, hopefully, you guys enjoyed and learned something. Appreciate y'all.